This is Nirav, the moderator for your conference call. Welcome to the Vodafone Idea Limited Q3 FY25 earnings call. For the duration of this presentation, all participant lines will be in the listen-only mode. After the presentation, a question and answer session will be conducted. Should you need assistance during the call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. Akshaya Mundra, CEO of Vodafone Idea Limited, and Mr. Murthy GVAS, CFO of Vodafone Idea Limited, along with other key members of the senior management on this call. I want to thank the management team on behalf of all the participants for taking valuable time to be with us. Given that the senior management is on this conference call, participants are requested to focus on key strategic and important questions to make sure that we make good use of the senior management's time. I must remind you that the discussion on today's call may include certain forward-looking statements and must be viewed therefore in conjunction with the risk that the company faces. With this, I now hand the conference call over to Mr. Akshaya Mundra. Thank you, and over to you, sir.
Thank you, Nero. A very warm welcome to all participants to this earnings call. Yesterday, our Board of Directors adopted the unaudited results for the quarter ending December 31, 2024. All the results-related documents are available on our website, and I hope you had a chance to go through the same. Let me provide key highlights for the quarter, progress on our investments, and the positive impact of the same, and insights on our strategic initiatives. With this, I will hand over to Murthy to share details on the company's financial performance. Before I move on to company-specific performance, let me share some thoughts on Indian telecom market and growth opportunities. Telecom in India has achieved widespread reach with 4G population coverage at almost 99% and 5G expansion also moving at a fast pace. The demand for connectivity is surging across demographics driven by diverse income groups, age segments, and evolving customer behavior. Technological advancements continue to reshape usage patterns, fueling the need for high-speed data and digital services. Between November 23 and November 24, the wireless broadband subscriber base grew by about 45 million, reflecting 5% growth. However, despite this impressive growth, overall broadband penetration remains below 65%, representing a significant opportunity for further growth with higher adoption of broadband services. The private mobile operators took a tariff hike in July 2024 after more than 2 years since last price increase, leading to improvements in ARPU and revenue. However, despite these gains, the industry's ROC continues to remain low. Further, telecom sector requires significant investments to support emerging technology and the rapid increase in data consumption. Therefore, further tariff increase is necessary to help the industry recover its cost of capital and sustain future growth. To maintain affordability and ensure connectivity for all, a pricing model where heavy data users contribute more for higher usage is optimal for the industry. Let me also give an update on the bank guarantee waiver. In December 2024, the Department of Telecommunication extended its support to the telecom industry by dispensing with the requirement of bank guarantee to be submitted for spectrum auctions held prior to 2021 reform package with certain conditions. Prior to this reform, BGs aggregating to rupees 247.5 billion were required to be provided by the company for respective spectrum installments 13 months prior to each installment falling due. As per the communication received from DoT, no BG is required to be provided for the auctions until 2021, except requirement to provide BG for 1 year for one-time partial shortfall for the 2015 auction, for which we are in discussion with the DoT. Let me now talk about our strategic initiatives. Our first strategic initiative is our focused investment approach. Post-fundraise, our CAPEX investments are gathering significant momentum. For Q3 FY25, we invested rupees 32.1 billion, which is more than what we did in first 2 quarters combined, bringing the total CAPEX for the first 9 months of FY25 to rupees 53.3 billion. The pace of network rollout is set to accelerate further, with a full year capex expected to be around rupees 100 billion. During this quarter, we made substantial strides in expanding our network footprint, adding over 4,000 unique broadband towers, the largest quarterly addition since our merger. Our network enhancements efforts included the deployment of 4G on the sub-gigahertz 900 megahertz band across approximately 15,000 sites, improving both coverage and indoor network experience. We also expanded our network capacity by adding approximately 10,400 sites in the 1800 megahertz and 2100 megahertz bands, which have resulted in faster data speeds of nearly 28%. We are enhancing our infrastructure by deploying high-powered small cells to tackle coverage and capacity challenges in congested areas. These ultra-lean pole sites designed for minimal tech deployment and single operator use are optimized for efficiency with lower operational costs. As of December 31, 2024, our total broadband site count stood at approximately 460,300, which includes about 74,800 TDD sites, 13,950 massive MIMO sites, and 12,800 small cells. Moreover, we expanded our 4G 900 presence in all 16 priority circles where we have the spectrum. With our investments done so far in the first 9 months of this financial year, we have added 6,900 broadband towers, including HPSC sites, out of which 5,000 towers were added in this quarter. I must remind you that this is just the start of our larger investment cycle. We plan to take 4G count to approximately 215,000 to 220,000. That is an increase of over 45,000 4G towers since the start of this investment cycle. Our immediate plan is to add another 13,000 towers till middle of next quarter, that is Q1. In the last 9 months, we expanded our 4G population coverage by 41 million, reaching a total of 1.07 billion by the end of December 24, and covering 80% of the population, up from 1.03 billion in March 2024. During this period, our 4G data capacity grew by around 24%, which contributed to an improvement of nearly 28% in 4G speeds. We are on track to meet our 4G population coverage target of 1.1 billion by March 2025. That is, further expand population coverage by 30 million in just 3 months. Our plan is to finally take it to 1.2 billion, that is 90% population coverage. With these initial investments, which have resulted in higher coverage and better experience for customers in already covered areas, we are witnessing green shoots. I am pleased to inform all of you that the combined VLR subscriber numbers for December and January are showing positive net adds in 11 circles. We are confident that these trends will improve further as the pace of capex investment increases. Further, the progressive launch of 5G services should improve the subscriber traction. The early result of our network investment is reflected in the latest OpenSignal report, where we emerged as the best 4G network in India. We led across all 6 experience categories for 4G users: best download speeds, best upload speeds, best video experience, best live video experience, best games experience, and best voice app experience. This recognition highlights that we users enjoy not only the fastest 4G speeds, but also an overall superior quality of experience for various online activities, including video streaming, gaming, and voice app calling. We are confident that as we roll out our 5G network, we will deliver the same superior quality. Building on our extensive network expansion and upgrades, we launched one of India's most hyperlocal marketing campaigns to raise consumer awareness of the significant improvements in network experience. The campaign focused on showcasing local success stories and emphasizing how our network has become our best ever network at the city, district, and locality levels. Moving on to market initiatives. Tariff increase implemented in July has contributed to growth in both ARPU and overall revenue. Most impact from this price hike is reflected in Q2 and Q3 FY25. As I mentioned in the last earnings call, alongside blended ARPU, we are also sharing a separate KPI, that is customer ARPU excluding M2M, which provides a clearer trend of mobility business. Customer ARPU excluding M2M has shown a quarter-on-quarter increase of 4.7%, and it has increased by almost 13% versus Q1 ARPU. Strategic initiatives were taken to reinforce market position through new offerings aligned with consumer preferences in the prepaid segment. The Superhero offering, launched in our 12 key markets, provides unlimited data for 12 hours from 12 midnight to 12 noon, in addition to the 2 GB daily quota, which is now available to be used in the remaining 12 hours. The Non-Stop Hero offering, launched in remaining 10 markets, provides unlimited data 24/7. As data consumption continues to grow, especially for consumers without wide broadband access, these propositions aim to enable a worry-free data experience. In the postpaid business, we continue to see improving performance. It is a key focus area for us, and as highlighted in the last quarter, we continue to see increase in our postpaid days on quarter-on-quarter and year-on-year basis. While a larger part of this increase is from M2M segment, we have seen a continuous increase in postpaid consumers over the last 1 year. We are providing optimum range of feature-rich offerings to meet the diverse need of postpaid customers. Recently, we launched Easy Plus, a new innovative proposition for corporate postpaid plans. It offers subscribers an option to select and directly buy additional services like international roaming, OTT subscriptions, and data packs for their personal needs on their existing corporate plans. This service is available on the V app. This first-of-its-kind proposition introduces a simplified approach by making it seamless for subscribers to digitally purchase services of their choice on their corporate postpaid plans, thus offering complete flexibility and enhancing the overall customer experience. We also introduced a new V Movies and TV Super Pack at Rs 175, combining data benefits with seamless access to high-quality digital entertainment. With this pack, we prepaid subscribers can access 15 plus OTT platforms, including Sony Live, ZEE5, Manorama Max, Fancode, Playflix, and more, along with 10 GB data. We continue to strengthen our international roaming business by expanding our roaming packs into new markets, adding 10 more countries in the last quarter alone. Today, our roaming packs are available in over 130 countries worldwide. Notably, we remain the only operator offering unlimited data and calls in as many as 29 countries. During the quarter, we extended our Be Someone's Week campaign to bring people closer and make them feel connected from wherever they may be. We engaged with the younger audiences through the podcast Be a Parent Yaar, powered by Yuva, where the central theme of Be Someone's We was woven into conversations between celebrities and their parents. The interaction with youth was further enhanced through Snapchat with the introduction of Be Someone's We lens. We have launched an AI and machine learning powered spam management solution to protect users from unsolicited and fraudulent messages. With spam messages on the rise, which are often used as gateway to frauds, we Spam SMS solution will safeguard customers by identifying and managing unsolicited and potentially harmful text in real time. As part of our broader commitment to customer safety and experience, we are continuously working to develop solutions to curb spam, including voice calls, to ensure that users are further protected from unsolicited calls. These measures are in addition to various existing solutions and practices, including making the mobile app URL simple to use for filling spam complaints by enabling automatic pickup of spam content, sender number and date, as well as whitelisting URLs in brand messages. The spam detection system continuously analyzes SMS messages in real time using machine learning to identify patterns, recognize suspicious links, and tag potential spam as suspected spam. As the system evolves, it adapts to new spam trends, improving accuracy and effectiveness. We are also committed to educating customers and empowering them to identify and report phishing attempts, ensuring a secure mobile experience by proactively sharing important security tips and related information. These strategic launches and initiatives reflect our commitment to staying ahead of the curve by understanding and addressing customer needs while driving market innovation. Moving on to business services, we are transforming from a telecom company into a technological-driven enterprise, expanding beyond connectivity to offer advanced solutions like SD-WAN, IoT, and cloud services. Supported by Vodafone Group's expertise, we continue to grow through strategic partnerships and expanded service portfolio. Business received several accolades recently. Its Ready for Next campaign for MSMEs was awarded the bronze category by ET Brand Equity DigiPlus. Additionally, the We Business Assist platform was recognized as Best New Product Launch at the 5th Silver Feather Awards. We also got recognized as leading brand in telecom sector at the Uttar Pradesh Awards. The next strategic initiative is driving partnerships and digital revenue streams. As highlighted before, we aims to be a truly integrated digital services provider with a very clear objective of driving higher digital engagement with our consumers and driving monetization through specific streams or by participating in select digital categories. Our stated strategy around this has been to build this through strategic partnerships and bring out most of these offerings on the Vi app. Vi app is a multi-utility app that offers not just end-to-end telco account management, but also allows consumers to play over 100 games, participate in esports tournaments, pay utility bills, shop across categories like entertainment, food, shopping, and travel, or buy almost any OTT subscription and watch over 350 TV channels and more. It is our constant endeavor to elevate the experience that our app offers to our consumers. We recently enabled the Vi app to be used for recharge by all prepaid users, even when their data limit gets over, to ensure that they can recharge without delay when needed. We have also enabled UPI autopay for all our prepaid customers to make it convenient so that their services are not disrupted in case they miss their expiry date. It is initiatives like these which are helping us grow engagement on Vi app, and it is showing in consistently improving Vi app ratings on Play Store. As I mentioned in the previous earnings call, we have launched Vi Movies and TV in an all-new avatar for mobile on both Android and iOS, as well as for TV across major operating systems. It is an offering mainly for connected TV, wherein our subscribers can buy a subscription plan to get access to host of their favorite OTTs like Disney Plus Hotstar, Sony Live, ZEE5, Sun Next, just like the way customers buy DTH plans for TV channels. During the quarter, we partnered with Lionsgate Play, a premium streaming services for Vi Movies and TV app, and bundling of Vi Movies and TV with our flagship postpaid plans to offer higher value to our subscribers. Additionally, we have also introduced first episode free feature for all original content on ZEE5, enabling subscribers to make an informed decision before subscribing. We have a very strong roadmap to build Vi Movies and TV as a destination of choice for our consumers when it comes to their TV entertainment. I would like to reiterate that we will continue to have a disproportionate focus to build a digital ecosystem with our partners, enabling a differentiated experience for the users, which will help us drive customer stickiness as well as provide incremental monetization opportunities. Moving on to the other important topic of debt raise, We remain actively engaged with our lenders for tying up debt funding towards the execution of our long-term network expansion. The recent support from government on bank guarantee has supported these discussions to move forward. Additionally, we have cash and bank balance of rupees 120.9 billion to be used for ongoing CapEx. With that, I hand over to Murthy, who will share the financial highlights for the quarter.
Thank you, Akshay. A warm welcome to each of you. The revenues for the quarter were rupees 111.2 billion, a year-on-year growth of 4.2%. The EBITDA excluding Ind AS 116 effects for the quarter was rupees 24.5 billion, improving by 15% on a YOY basis. This is the highest quarterly EBITDA since merger, and the margin has improved to 22%. The reported EBITDA, including Ind AS 116 effects, was rupees 47.1 billion as compared to rupees 43.5 billion in quarter 3 FY24, a YOY growth of 8.3%. The reported EBITDA margin improved to 42.4%. Further, the depreciation and amortization expenses and net finance costs for the quarter were rupees 56.3 billion and rupees 56.9 billion respectively. Excluding the impact of Ind AS 116, the depreciation and amortization expenses and net finance costs for the quarter were rupees 41.6 billion and rupees 47.5 billion respectively. The finance cost, for this quarter has declined in comparison to last quarter, mainly due to the reversal of interest, provisions based on certain agreements that we have arrived at with some vendors, and also due to some, foreign exchange gains. The PAT loss for this quarter was rupees 66.1 billion. The debt from the banks has reduced by rupees 52.9 billion during the last 1 year and is currently at rupees 23.3 billion at the end of quarter 3 FY25 versus rupees 76.2 billion in quarter 3 FY24. The cash and bank balance, comprising mainly of FPO proceeds to be used for stated objects, is rupees 120.9 billion as of December 31st, 2024. With this, I hand over the call to Nirav and open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Vivekanand from Ambit Capital. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. So, first question is on the response to your network expansion so far. Thanks, Akshay, for highlighting some markers there, the VLR trends in several circles. So, to understand this better, as you are expanding the network, is that helping you in reducing churn, which is currently from when customers upgrade from 2G to 4G, you lose those customers? Is that how it is playing out? Or are you also able to strengthen your gross adds? Because when I look at the 3Q data, it seems like your gross adds don't seem to have changed much. In fact, they seem to be flat over the last 1 year. So help us understand that one point first. And the second question is on the tariffs. Now that the tariff hike impact is in the numbers, when do you think is the right time for the industry to consider one more tariff hike? And how should one think about the tariff structure here on when the next tariff hike comes? Thank you.
Okay, thanks, Vivek, for your question. Your first question is relating to network expansion. And can you just repeat what exactly was the question relating to network expansion?
So, when you did this network expansion, you said that VLR has improved. But when I look at the quarterly data, I see that the gross adds have not increased. It seems like your churn may have come down, but no effect on gross adds. Is that how it's playing out? Or how should we think about it?
I mean, the gross adds figure is quite evident. So ultimately, if there is any improvement in subscriber metrics without any change in the gross adds trajectory, then it has to come from the improvement in retention of the subscribers or better quality of subscribers, which has been our focus for the last few months. The quality of acquisition and whatever can be done in that direction has been a focus area for us. I think I would also want to highlight here that in terms of gross adds, in terms of our share of gross adds, it is much above our customer market share. So that is an area where we are already doing well. We are able to attract customers. Our challenge has been sometimes to retain them because of the lack of investment which we have seen for a fairly long period of time. But as we return back to investment, and I would like to emphasize that what we have seen until now is just the beginning of the larger investment that we have. Only with the investment which have been incurred, and actually if you look at the results in December, January, only probably the rollout under November and part of December would have any significant impact, which is only 10% of our new rollout of sites. So really speaking, the larger investment has still to happen, but even with this minimal investment and with a fairly wider communication to our customers about the steps we are taking to improve the network, the pace at which we are rolling out, we have started to see early green shoots, and which is reflected in the VLR for December and January combined becoming positive in 11 circles, which is a major improvement. And I would say we believe as the pace gathers and as the small investment becomes more formidable, and when we are doing this larger investment, definitely these trends will improve for the better. We are very confident about this. The second question was relating to tariffs. You see, it's like this. In a normal scenario, I would have said that a time gap of 1 year is ideal between two tariff increases. However, I would add to that given the place where the telecom industry in India is today, where the return on capital is, whether you take the market leader or you take anyone else, nobody is returning their cost of capital. And in that scenario, I would say it is fairly justified if it can be faster. It could be 9 months also, I would say. So in a normal situation, a 12 months period is ideal to kind of make any changes on tariffs. But given where the industry is today, a faster tariff change is probably a possibility and the need of the hour.
Okay, that's helpful. You don't think that the recent regulatory comments on making the voice-only plan more affordable would come in the way of another tariff repair initiative, right?
No. I think, let's say this is what I guess I've been saying for the last 2-3 years, that we have moved to a pricing structure where marginal users pay a certain price, and then the incremental price which people who use heavily is very low, which is not a structure in any industry generally. So I think it is important that while maintaining the affordability, which has come through the voice and text plans in a manner, we try to say that the people who are using or the consumers who are using more should actually be paying more. I'm not saying that there should not be any benefit if people pay more. Their per unit of consumption or per GB of consumption should be charged less. The concept of telescopic pricing is there in all products and services. However, I think in telecom in India today is very accentuated. And so I keep repeating this, that we used to have an ARPUs which were, let's say, maybe 10-20 rupees to a range of 5,000 rupees for many normal consumers without international roaming. Today, almost everybody can fulfill their requirements by buying a plan of 400, 500 rupees if you choose to be on prepaid. That is what needs to be addressed. So I don't think the voice and text plans would come in the way of achieving the objective of tariff increase and tariff rationalization.
Okay, great. I'll take up one last topic, which is very important for investors. That's on the next 12 months, including the time that after the moratorium, when you have to start making payments for spectrum dues and AGR dues that were not deferred. So the question here is, one, what is your dialogue with the government, given that it's now less than a year that you will have to perhaps engage with them and convince them or get them to take shareholding in lieu of the deferred amounts? And secondly, the regular installment also is a fairly large number. So if you could walk us through how you are thinking about, let's say, the next 12 to 15 months in terms of cash in and cash out in the company, that would be great.
So, Vivek, let me put it this way. As we have been saying that post the dismissal of the curative petition, where the judicial route was closed, we have been actively engaged with the government to find a solution. As far as conversion is concerned, it is a part of the reforms package. And so while I understand it is at the government's option, but the fact that in the reforms package in 2021, it was provided that the conversion could be done at the government's option after the moratorium of period of 4 years, that clearly shows the intent that the government has provided that in the reform package to support the industry where this need arises. So I think that conversion is a part of the reforms package, and that should not be a difficulty in the initial period when we are kind of making the investment and improving our cash generation through improvement in performance. In terms of what we were seeking through the curative petition is correction of some of the demands which would have brought these liabilities down. That has not worked. So we are having a bit of a holistic engagement with the government. And I think when we are talking about conversion, generally it is not necessary that it is only the deferred installments which can be converted. I think the non-deferred installments are also part of that. So I think it is difficult to kind of say what will finally happen, but I would say that the government is very cognizant of the fact that support is required at this time. They have also seen that we have raised equity of 26,000 crores overall through promoters, FPO, vendors converting some of their dues in the last 10 months or so. And we have made the investment, we have started the investment cycle, we have seen positive results coming out of that. And government is actually the largest stakeholder in this entire exercise. So they are cognizant of this fact, and I am confident that they will find a solution.
Okay, Akshay, thank you so much for the elaborate answers. I'll come back in the queue for more.
Thank you. Next question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Yeah, good afternoon, Akshay. First question on the network operating cost. Now that we are scaling up the network, this quarter it really didn't show up. I believe we did a lot of investment at the fag end. How should we look at network cost going up from here in next few quarters as we expand the network?
So I would say, and if Murthy wants to add anything, he can add. Basically, you should look at that. Generally speaking, as you roll out a new site, the cost, it varies from circle to circle, but a new site energy cost plus rental is in the ballpark of 60 to 70,000 rupees per month. And if you then look at, there are lean sites today where the cost structure is much lesser. So really speaking, the growth of network cost is directly proportional to the number of sites that one rolls out. So that can be fairly easily calculated, number of sites multiplied by, even if you take it a little on the higher side, as some other marginal costs may go up, somewhere around 70,000 rupees per site is generally the cost increase, which is linear. I've already in my opening remarks alluded to as to what is it that we have rolled out and what is it that we are planning to roll out by middle of next quarter. So that should give you a fair idea. I think one of the factors which also happens in this cost is that the energy costs are seasonally lower in this quarter, so some of the costs attributable to the higher cost on account of rollout may have been offset by the saving in energy costs also. Murthy, if you want to add something.
No, not really. So Sanjay, I think typically you should look at the seasonality in consumption the way we have been, the industry has been showing it, and particularly for different quarters, and for the growth in sites that are coming in. Obviously, I think Akshay has told you as the kind of cost that will incur. That's on a cash basis. On a lease accounting basis, obviously that'll be slightly different, and accordingly, as we have always said, that in the first few quarters where there's a large site of large count of sites coming up, the cost below EBITDA may be slightly higher than what it will be, and it'll even out over the period.
Yeah, so just to as a disclaimer, my comments were based on cash EBITDA accounting basis, not on index, which Murthy has explained.
No, that's clear. That's clear. On the 5G expansion, when should start that? Will be starting in next quarter or 2 quarter down the line? When are we thinking to roll out 5G and the circles that will be priority for that?
Sanjay, it looks like you have not seen our press release clearly. We have clearly stated there that Mumbai launch is slated for March.
Okay.
And Delhi, Bangalore, Chandigarh and Patna are slated for April. So that is something which is already stated in our press release. So we started this. I think the site rollout is already progressing in Bombay and Delhi. It's just that you need to get to some kind of a threshold before kind of doing a commercial launch. That is what we are waiting for. So this is already progressing. The launch has started. I think in terms of the other circles, the priority would generally follow the priority circles. We said that Delhi, Bombay and Bangalore were the 3 metros which had to be covered first. And of course, then we move on to the more other important cities and where we have a strong position like Gujarat, Maharashtra, Kerala. So those would be the ones next in line, which we will give guidance, I think, somewhere by the time of the next earnings call.
Very clear. Thanks, Akshay. And then last question on the ARPU side. Now that the tariff increase is synced in, for next year, assuming there is no tariff hike, how do we see this ARPU growing, say, by premiumization, and our postpaid is growing faster than the prepaid? At least postpaid has, right now we are in a positive trajectory. How do we see ARPU growing organically without tariff hike?
So one thing, as was discussed in the last question also, that if we are talking about a full year's time, then I think, as I said, 9 to 12 months is a time window for a tariff increase. And I would expect that next year's ARPU growth will also be impacted by a tariff increase, which should happen. So I think that is one. But then what are the other drivers of ARPU increase besides the tariff correction? So I think, as will happen in our case, is that as our network kind of, with the investment, it starts improving, I would say we today will probably have maybe besides the growth of subscribers, which may not impact the ARPU, but there could be multiple secondary SIMs which, if converted to primary SIMs, will result in improvement in ARPU. So that is there. And these could be significant because if a subscriber is being counted but it is not a primary SIM for them, they recharge infrequently. That kind of reduces the ARPU. But if they become the primary SIM and it recharges regularly, then the ARPU goes up. And I would say in terms of the delta of ARPU for those subscribers, it can be significant. The others are upgrade of subscribers to higher plans. We are also kind of bundling this with many of the packs, particularly in the postpaid, but those choices are also available in prepaid. So upgrade of subscribers, more bundled offerings, providing higher value products. And as I said earlier, as a part of the price increase, as for the industry, I would actually want to see the price increase going up somewhat in line with the consumption. And I think that could be another way to say that the ARPUs will go up.
Got it. One last bookkeeping question. Can you give the breakup of gross debt between the spectrum dues, AGR dues?
Sorry, what is the breakup between?
So Sanjay, I think, okay. So I think the AGR dues roughly are in the range of about 7,000 crores, and as far as spectrum is concerned, it's about 1,40,000 crores.
Got it. And total gross debt is?
So therefore, this is not a debt. This is a deferred payment obligation. So the only debt I have is to the banks, which is about 2,300 crores as it stands at end of December.
Okay, that's the bank borrowing what you're talking about.
That's right. Yeah.
Got it. That's it from my side. Thanks for answering those questions, and best of luck for the.
Thanks, Sanjesh.
Thank you. Next question is from the line of Gaurav Malhotra from Axis Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just have one question. If I just look at the overall OPEX on a Q-on-Q basis, and I see it even on a YOY, the number has not really moved up, but obviously there is capex being done. We also see marketing activity has sort of started to move up again. So just wondering when will the sort of OPEX sort of start following the kind of moves which we are seeing in capex, and also maybe the kind of marketing activity which is happening on the ground?
So while Murthy will give you a specific response, but I think when you look at it year on year, and if you say that network is growing and the costs have not increased, I think it is also a factor of many other efforts and initiatives we are taking to kind of bring down the costs and contain the costs. Normally, we do not talk very much about it. And maybe since the rollout has been minimal at this point of time, the initiatives taken otherwise are offsetting to some extent the cost increase. So I would say that is a point about cost management while we are kind of looking and investing now. We have also been very focused on costs, and that is an exercise which will continue. But if Murthy wants to give any specific responses,
No, so, if you see on a YTD basis, last year versus this year, while there are some costs which have increased, say the employee costs, etc. Network costs is again a thing because we've conveyed that we have taken certain initiatives, with regard to, consumption, etc. And even in the case of, marketing, costs, we have said that, we have ensured that the content costs have come down. So therefore, all these have given us benefits, and we expect these benefits to, keep going. But having said that, from a network cost perspective, given, as I answered, Sanjay earlier, based on the number of towers that goes up and the way we account for it, obviously there'll be some costs coming in, as the numbers increase.
And also in terms of the marketing costs, I think we have kind of contained it right now. But as we reach a point where the network rollout has reached a place where we think that now it is important to communicate to a larger audience through television and all, I think all those would also come. So those costs would also go up, where we are kind of doing a lot of communication, but not the expensive kind of communication at this point.
Understood. Thank you.
Thank you. Next question is from the line of Hemang Khanna from Nomura. Please go ahead.
Hi, sir. Thank you for taking my question. My first question relates to the subscriber base. Now that we're halfway through the quarter and tariff hikes are largely absorbed, could you help understand how subscriber losses are trending now, and has the run rate improved significantly from the third quarter run rate? And my second question is on the debt raise. Could you help us with updates on that, on what's happening with the debt raise? Is there any timeline in place? And additionally, to help us understand this better, what are some, roadblocks or the next steps which are present from the debt raise perspective, which are required for us to close the debt raise now? Thanks.
Okay, so I think on the subscribers, as I had alluded to in the opening remarks, and let me repeat that point, that our investments, let me just put things in perspective. We started making the equipment capex, which was largely upgrade of capacity and coverage by rolling out 900 megahertz 4G, and also deploying more layers of spectrum on existing sites by software upgrades. This was the main activity which we had done between June to September, which kind of gave us capacity, somewhat increased coverage and better indoor experience through rollout of 4G on 900 where it did not exist earlier. We finalized our orders with the vendors in September where we had made the announcement, and those deliveries have started coming from end of October. The large-scale deployment started then in November, and December has been a fairly large deployment, which will continue going forward. So I think this is what is happening. So I think as a result of all these initiatives and also a lot of communication, which I hope is visible to you, we have been able to, in December and January, as I've given, in 11 circles, we have had a positive VLR net adds, which has happened after a long, long period of time. So definitely these investments have started to show an impact. And as I mentioned, this is a very small part of our overall CAPEX plan. And we believe as the CAPEX grows, and particularly the sites, so our population coverage has grown from 1.03 billion to about 1.07 billion since April. By the end of this quarter, we expect to get to 1.1 billion with the ultimate target of going to 1.2 billion. So I think this will keep on happening, but I guess in our case, it is both a question of the network experience and perception, because till the time we were not investing or action was not visible on the ground, there was this perception that we will probably not invest. When customers are now seeing action on the ground, investments coming, their experience improving, I think these things will turn around. And we are very confident that as we keep on continuing this momentum and accelerate the investment, we will see the subscriber metrics improving further. The second question was relating to debt. See, it's like this. One of the concerns which happened after the curative petition was dismissed, not so much on merits but on a technicality. I think there was a concern whether the government is supportive of the telecom sector and in addressing the issues which were kind of arising out of in terms of liquidity post the AGR judgment. While the larger engagement with the government is ongoing to find a solution to that, I think the action by the government in waiving the bank guarantees is a clear indication from the government that they remain committed to support the telecom sector through reforms as and when required. And I think that has given confidence also to the banks. So I think post that we have restarted the discussions with the banks. Discussions are ongoing. However, as I had mentioned before, the banks are also looking at some clarity on the AGR front. Let me repeat again that the projections which we have been working on with the banks did not consider any relief on AGR. But given that it is an important point, they also want to seek some clarity as to what is the final position on the AGR. So these are ongoing discussions. These are progressing. And we believe that we should be able to kind of come to a conclusion soon. I will not be able to give you a timeline at this point of time because there are multiple moving parts. I hope I've answered both your questions completely.
Sure, sir. Thanks. That was extremely helpful. Thank you.
Thank you. Next question is from the line of Aditya Bansal from Motilal Oswal. Please go ahead.
Hi, Akshay. Thanks for taking my question. My question is around two data points that are quite divergent. One is your postpaid subscriber base has been consistently going up, whereas if I look at data or data usage metrics, they are on a declining trend despite offering generous free data that you mentioned in the opening remarks. So what would explain this divergence? And I may have a follow-up on this.
Okay, I think our telecom trends generally are determined by prepaid subscribers. Postpaid subscribers, while being high ARPU, they are not the ones which drive the trends of consumption. So postpaid subscribers are going up, and as I alluded that, which I believe you would have noticed that if you just look at the postpaid subscribers, it's a mix of M2M and the consumer space. A large part of the overall postpaid increase is coming from M2M, but over the last 1 year, we have seen a consistent growth in postpaid subscribers, but they do not determine the data usage. The large part of it comes from the prepaid subscribers. So that is point number one. Now, in terms of data usage, we have seen a bit of decline, which was happening, but I'm happy to say that with whatever initiatives we have taken, we have seen a growth happening in January over December, and we expect this month-on-month growth to continue in the coming 2 months also. So there has been a period where, of course, the important metrics is data usage per sub, and that is the one I'm referring to, not really the overall data usage. But in January, we have seen an overall improvement in the data consumption usage, not the data per sub amount.
Sure. Would it be possible to share the quantum of subscribers who are using less than 1 GB a month on your network? Just wanted to assess potential impact from any downgrading to the voice-only plans. Would that be possible?
No, so I don't have that data, but let me just tell you, we have been looking at, and of course, maybe it is not the right time to draw any conclusions, but there has not been so much movement towards that. My personal opinion is that today the market has evolved to a point where everybody wants some data. So let's say even if you were consuming 200 MB of data a month, you cannot move to a voice and text plan. You are saying how many people consume less than 1 GB. I'm saying even if I'm consuming 100 MB, I would need a data plan. Also, the differential between the voice and text plan and ULV is marginal. So anybody who wants to use, so I don't think, given the price differential between the two, there is so much of scope for downtrading. And in any case, for people who have minimal data users, or even who need the comfort of having a data plan without any usage also, if you're just paying some 20 rupees extra per month, I don't think it is very much. So I don't see much of a risk there. Although this is just early days, and we'll have to see how this evolves.
Sure. Thanks a lot.
Thank you very much. Participants, you may press star and 1 to ask a question. Next question is from line of Risha from HSBC. Please go ahead.
Hey, hi management. Thank you for the opportunity. Can you remind us on the amount of statutory payables due in FY26E and FY27, and what is the split there between AGR and spectrum liabilities?
So, okay, on the AGR liability, the installment annually after the monitoring period is roughly about 16,000 crores. Yeah. And, as far as the spectrum is concerned, that would be roughly about...
So actually, FY26, the installment would be less, so the AGR remains the same for FY26 and 27, which is about 26,000 crores. I think the spectrum installment in FY27 is about 12,000 crores. That's right. Yeah. And in FY27, it will be more like 27,000 crores.
Thank you. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Next follow-up question is from line of Vivekanand from Ambit Capital. Please go ahead.
Hi, thanks for the follow-up opportunity. So my question is on the users on the network. You mentioned that as soon as the tariff hike happened, there was some knee-jerk migration to BSNL. Have those customers started returning now that the 90-day cooling off period is over? That's one. Secondly, as you chart out your 5G rollout plan, would it be possible for you to disclose how many 5G users are there on the network? Those are on the subscribers. Now, Akshay, you mentioned in your answer to my prior question that you're also engaging with the government to convert some of the non-deferred loans into equity. What is your ask from the government at this stage? Do you need more time to pay, or do you want to get the government to convert more amounts of spectrum dues into equity? Could you explain that? Thanks.
So Vivek, let me answer, or you may say not answer your last question, is that is something I think it's a wider engagement with the government, and I think it would not be right on my part to get into any further details besides what I've already explained to you. In terms of the impact of BSNL, the impact has completely reversed. And I think if I just look at June versus what is happening currently, the net port ins from BSNL has increased from June to January as far as we are concerned, although in the interim there has been a period of loss. Now, there are some subscribers who have preferred to stay there. It's not that everyone is coming back, but I think the gains which BSNL had is reversed, and I think more than reversed. And if the net porting from BSNL has increased from June to January, it is basically some reversal which is happening. We have not tracked it at a subscriber level really. The other